be live. 1, 2, 3, go.
Hi, everyone. Welcome to our market talk. Hi, Rafael. So first of all, last time we had some technical difficulties, and as far as I understand, Zoom is making things a lot more difficult than it was before. So sorry about that. But yeah, anyway. So I hope that today you can watch us live. Uh, these 2 weeks were quite interesting. Not much changed in my bullish view. Markets are going up, and I'm still bullish. So we'll see what Rafael thinks about that. But first, I know that we have some exciting news about the platform, about the product. So, Rafael, maybe you will start talking about these features that we plan to release, and after that, tell us about your views on the market and what you see.
Yes, yeah, I thought we could start by introducing some news regarding the platform before going into what we see for the market. So let me do the screen share. Okay, you should be able to see my screen. Do you see?
Yes.
Okay, good. So this is our testing platform, and basically we test there, then we release on the true platform. So the one people have access to is this one. So we have decided to add following users' request. The homepage will now be some kind of summary of what happened, what will happen in general, and also in the portfolio of the user. So we have added a summary for the prior day. Basically, it's what the market did the day prior. The significant economic event from the day prior. So we will only display EU, US, and Japan for the countries, and the impact being medium and high. So we are focusing on the juicy stuff. And then what you're going to see today, so the next day starting, you're going to have also a very short overview. So you know the big page you used to have. You can still access to it. You just click there and you're going to go there. But it's the main tickers basically. Also here you will find recent changes in your portfolio. So it should be from the previous 2 days. The volatility. Also for a limited number of tickers, you can still go to the main page as before. Return correlation for the most important tickers, gamma at open, and the top 5 bullish and top 5 bearish tickers in your portfolio. The idea of that is that when you log in, at least you have a general idea of what's going on, what's going to happen, and monitor very quickly your portfolio. Ultimately, the idea is to get this change into a PDF that you could receive daily in your email, but that's gonna take some more time. So that's the first change we're gonna do. One other change that we will also release. So the release will be not this weekend, but the weekend after. It should have been this weekend, but I found some bugs. Will be also that you can create watch lists in crypto. So before you used to have the portfolio that included more than 100 cryptos, but you were unable to create watch lists in this specific place. You had to go to your dashboard and create it here. So now you're going to be able to create watch lists right there. That's the second stuff. Another thing that we added, apart from reorganizing the whole system on the left side, we added in the scanner, we added the possibility to scan using the caps. So you know what it is, right? Upside cap means that the normal top of the range equal long-term top of the range, meaning that you should expect at least some limitation for the upside or even the top, and downside cap being the normal bottom range equal long-term bottom range, meaning the downside is limited, and it's exactly what happened when we were talking about buying the next dip. It was because the downside cap was there for a large number of tickers, especially SPY, QQQ, etc. So you will be able to scan using that. We also added the implied volatility rank, implied volatility percentile also as a system for scanner. And we added these two columns. So IV rank, IV percentile, also the text will be changed, right? It's going to be much simpler. IV rank and IV percentile that some of you think are more useful than IV implied volatility premium and discount. Of course, if you don't need that, there will be an option in settings to remove these two. But it was a request also by users who found this more useful. Yeah, I think it's the main changes that's gonna be released in 2 weeks. I just wanted to address that. There are also some stuff that will be added in API. I know that one user requested the possibility to know what ticker, what list included what ticker using the API request, and it's going to be added to in the release in 2 weeks. Anyway, I'm going to do, yeah, actually I was in the wrong page. I'm going to do some posts soon on our Twitter page to say, okay, what are the features we're going to release in this release in 2 weeks. Okay, so that was just a quick intro, so I don't forget, and at least you are focusing on that at the start of the video. Now back to market. Okay, so 2 weeks ago, so it was, I think, the first, we mentioned that I mentioned that first, we are looking to buy the next dip. Little did I know that the next dip was actually the first. And the second thing was that VIX was very interesting and pointing to how to say it was a good point for bulls because we had a trade that reached the minimum value of daily trade. You know the one, I made a video about it released on Monday. So for those who watched, you know what I'm talking about. And I was expecting some kind of bounce. I was expecting for it to go a little further and then VIX to go down after that. So we got the bounce. It couldn't go above trade, and then we got the VIX crash that is always happening after vola starts to rise here, and you just had trade of volatility reached its mean. So what we got was, you can see here, a crazy rally. So yeah, so poor bears. I mean, there are still some alive. It was expected. We got the caps, we got the VIX setup. Everything was playing for the dip to be confirmed and the rally to start. So now the question is, I think we reached all-time high. It was yesterday, and what's gonna happen? Okay, so in my opinion, considering that we reclaimed our range, we are back to bullish trend in NQ, ES, RTY, QQQ, SPY, IWM. Even today, we reclaimed the bullish trend in in Bitcoin, etc. I mean, it's very hard to find now something that that has its volatility rising in indexes. That is also worldwide. The most logical future is we're gonna keep going higher, and I'm gonna actually use the VIX as a basis for this scenario. So this setup that I have mentioned repeatedly with volatility rising, the trade of volatility rising happens quite often. And I want to use what happened in October, November of last year as a mirror. It happened just exactly the same way. We reached mean, and then vola just kept rising. Sorry, vola just kept rising, and trade of vola just kept rising until we get to the top. So the max daily trade, which is this one, 37.6. If you want to mark it because you are using my script, you can mark it. So this process took a whole 3 months. Yeah, 3 months. So in my opinion, we are just in the early phases of this rally. I expect it to last several months. And even after we reached this top here on the VIX, it took another 2 months just to get the VIX to bottom using the setup I have mentioned also repeatedly with VIX above trade and trade, trade and trend, trade above trend, then retest of trade. So then we got the very limited sell-off we had just experienced in NQ. So in my opinion, we have, I would say, at least 5 months before we could experience some kind of trending volatility again. So any dip, in my opinion, is a buyable dip. I don't think we're gonna see anything crazy happen volatility-wise before at least 5 months. So you can imagine we are 17th of May, so that takes us to at least the end of October. That's what I'm thinking. So, I mean, not to talk too much today, I don't see any reason to go short. All I see is deep buying opportunities in stocks. I'm going to go quickly over CL, GC before handing the mic over to Vi. So CL did the setup I had mentioned before. It went to trend. I told on Twitter, if you really want to buy oil, CL, sorry, now is the time. So that was the retest of trend. Now the problem is it's bearish trend, right? So you are betting on the fact that oil will reclaim trend and go back up. So that's what you're betting on. I'm not betting on that. I'm of course waiting for this to get back there. But if you play the bounce, maybe for a few days, it was not a crazy play. It made all the sense in the world. An interesting one, and I'm actually quite surprised by it, was JC. I expected JC to go back to MFR trend before at least attempting to rally back up, but it couldn't even hold bearish trend on my trade and trend volatility system. It went for 2 days maybe below, then reclaim, and then we are just back up. And you also have trade here, the white line, starting to go back down, which is actually very bullish for gold. So if you went back in after unloading when I signal a potential top, if you went back in and trend, you're in a very good spot. So yeah, I wanted to address that. And finally, sorry, Vi, then yields. So yields, we saw an attempt to break trend. Actually, all of them, all the ones I'm watching, sorry, 2-year, 10-year, and 30 years is the same. So they went almost to mean daily trade. Then we got some kind of sell-off, went to trend, and now they are trying to hold. 10-year is the same. See, it's insane. And 30-year it's the same. So I would encourage you to monitor these guys because you have made a lot of talk about the Fed has tamed inflation. So this will tell you if it's true or not. So keep that in the back of your mind. Every day, I would encourage you to check these three and to see, okay, what's happening with trend. And let's say we have the same setup as we had last year in October, November. You would expect a break of trend and a down move until at least a bottom, like maybe 3 months later. So I would encourage you to watch these guys. Okay, that's it for me. I'm gonna keep it tight. Sorry, even though I talked a little too much. Stop share, and we are going back to you, right?
Thanks, Rafael. Great insights. Actually, your timing was better than mine because I remember two shows earlier. I was already bullish, and you said, no, maybe not yet, not yet. You was right, but it doesn't matter. It's a lot easier for me and a lot quicker now because we are on the same page. Because no surprises, nothing changed. I'm really bullish this market, and I also think that it's now these dips need to be bought and must be bought, and of course. A lot of signals supported that, and I hope our users bought these dips because some signals were pretty obvious, and it's a crime to ignore those signals. I will talk about that later. First of all, yeah, I'm really excited about our updates. Personally, when it comes to implied volatility and trading options, which I do quite a lot, implied volatility rank is the most important number that I scan for. So I hope it will be useful for those who are active options traders also for our users, I mean, because it will be a lot easier to have everything in one place, and you know, no need to go to your brokerage platform to see ranks, percentiles. Now you will be able to see everything here on MFR. Yeah, so I'm really excited about that. You were talking about oil, and actually, I just noticed that USO, for those who are trading ETNs and ETFs instead of futures, USO, even though it's neutral trend, but the downside is capped. So it's a very good signal that actually supports what Rafael was talking, and knowing the structure of this derivative USO in particular. I mean, it uses futures, so of course, if futures go up, it's just good to know that signal is supporting that. Okay, I'll share my screen. Let's talk about correlations, of course. What else? I mean, correlations. So, if you see my screen, first of all, I just wanted to go to MFR, and yeah, of course. So you see that USO downside is capped. Now, yesterday I tweeted about NQ, and we see the same thing today in QQQ for those who noticed that, of course, upside is capped. So, oh yeah, I have a GME chart just because why not? It's a very interesting chart. Actually, GME today touched the end of day range and bounced a little bit, but of course it doesn't matter. It's a crazy stock. Okay, so first of all, again, a little bit of education and rant about the caps and why I think it's important. So let's wait for longer term ranges. Yeah, so I tweeted when I saw that upside is capped, I tweeted about that, and so for those who bought the div, personally, I bought option structures when we broke from neutral to bullish. So Just so you know, I still have those structures. I have some butterflies because butterflies are really, really cheap. And with the target of previous regular range high, that's what I do. Because who trade options, you know that butterflies, you usually you sell your target. So my target is still not there, but really close. We will see. So and some spreads. So not only butterflies but spreads, because for me it's way more capital efficient. But anyway, what I wanted to stress is that even though it was a great dip, great rally, and still is a great rally, but these two small red candles shouldn't be really surprised, because now we see this capped upside. So I would love actually to see uh, a deeper dip. We will see. I don't expect that dip to be really deep, but yeah, we'll see what happens on Monday and Tuesday. But if we get a little bit more downside, I will be more than happy to add to my bullish trade using futures or options. We will see. I rarely trade ETFs because for multiple reasons. One is, of course, capital efficiency, but another one is that it's a lot easier to manage risk using derivatives for me. Anyway, yeah, so this cap is very important. Now, as promised, and as always, I'll go to correlations. And supportive information, just to support what Raphael said, and what I'm talking, that I'm still bullish, and I also see no reasons to short this market, is actually that correlations are not high. We had quite a big rally still. I mean, no one can ignore. We had a nice rally. Market is also at highs. Of course, the futures, when watching futures charts, it's important, you know, these people who are back adjusting charts or not back adjusting charts, they have different highs and lows, but still, I mean, markets are at highs, but this trade is not crowded. This trade is not crowded because some correlations are really low, some are medium, but nothing to be worried about. Average sector correlations are actually going down and pretty low. 65 is not extreme. Basically, 65 you can say that it's normal. So when it comes to average sector correlations, and of course it happens in all durations, well, this number is not high. Individual sectors, if you want to see, so yeah, what we have, most are quite low, but yeah, XLY, XLI are on the higher side, but that's basically it. Uh, Again, I already repeated it multiple times, but for XLK, high would be like, I mean, 99, because I mean, tech and S&P in general are always highly correlated. So when you see XLK 93, it's not high at all, relatively. So how correlations are changing? Again, they are in most cases going down. Now, so in previous shows, again, I talked about stock bond correlations and stock dollar correlations. We will see, and actually, I mean, the situation is going even more strong. So, I mean, SPY TLT correlation is crazy. It's 0.47 when if we are looking at 30-day time horizon. So of course, bonds are not a hedge, and usually what it actually means, I talked about that for years. That usually means that crash is coming, but I mean, our signals are not supporting any crash at all, and the dollar correlations also are not supporting any crash at all, because I mean, you get a dollar right, you get stocks right in most cases, especially in the S&P. So, and I mean, this correlation is just grinding lower and actually with a very, very strong pace lower. So it's bullish for stocks. And when you see the dollar chart, I mean, it's bullish for stocks, not just because of this number, but you open a chart of DXY or euro dollar futures or DXY futures, and basically you can trade S&P to the opposite direction of where the DXY is going, which is nice. Actually, that's how it's supposed to be. So interesting thing is that stock bonds correlation is actually not how it's supposed to be, but dollar is at its place. That's what you should expect. So again, yeah, volatility, nothing interesting. I mean, we all know that volatility is very, very low. Also, I tweeted about Japan, about Nikkei multiple times. Actually, I'm a buyer in the Nikkei. I use futures, I use minis because Japan is actually a very interesting market that even in yen nominal value, actually mini contract is trading more yen nominal volume than a big contract. So most likely Japan retail like to gamble or institutions are also are hedging using minis, not big ones, which is, I mean, interesting. But yeah, so anyway, I'm a buyer in Nikkei. We'll see how it goes. Now it's in the middle of regular range and also basically in the middle of longer term range. So if I would have no positions, I would maybe not buy here, but I'm a buyer in Nikkei. I have positions. I will manage them. It's neutral. I will get rid of them if it goes bearish and will reinitiate them. But it's neutral. Neutral is not worrying for me here because I still think that Japan has upside. So like I said, it's not always a great idea to trade in a neutral area, but because I have these positions, I have this. So I'm not worried about that here. Yeah, so I'm a buyer in indices, basically Japan, US. I don't have any positions, but if you look at this beast, I mean, it's crazy. Raphael will laugh, but I mean, this chart is selling a lot, a lot. DAX, I mean, going to the moon. So yeah, if we get a decent dip and a good signal from ranges perspective in DAX, I will be buyer as well. So now I have positions in Nikkei now when it comes to futures contracts, and I have options in US space. So we are talking options on futures mostly, but yeah, option structures in NQ, yes, etc. So again, not really worried about big crashes now, but of course I can stress that enough that if you are a trader, you should be ready to act at any time. That's what I do, and that's what I stress about. That I mean, I'm not worried now. I mean, tomorrow or on Monday, I mean, opinion can change drastically. And of course, I would tweet about that if I see something in correlations or reversed exponents or MFR data in general or what I use. But for now, Hearst exponents are quite strong. In a lot of interesting assets, we see that downside is capped. On another assets, we see that upside is capped. So it's quite interesting. But overall market is not overcrowded and definitely not overbought from the momentum perspective when it comes to especially US indices. Yeah, so that's what I wanted to talk about and to again to educate on the importance of watching multiple things, so not only ranges and trends but also correlations and other things that we provide to get a bigger picture, because you can't trade just by looking at one thing. You choose, like choosing regular term range and trading that. It's not a process. So yeah, my process involves multiple things. So yeah, Rafael, what you think about also about DAX? and Japan, maybe you have any opinions about that?
Yeah. Actually, DAX, I remember 2 weeks ago, one user was asking about building the portfolio. And you were saying if your plan is to build a portfolio that you can hold for several months, even over weeks or months, you should ditch the short-term range and only focus on the long-term range. And look at
Yes,
DAX.
correct.
What happened? DAX just went to bottom of the long-term range
Yeah.
and bounce right from it, and then you have a crazy rally. So let's say you are building a portfolio and you wanted to add a European exposure, you could have set an alarm or something for the low of the long-term range on DAX, get the trigger, take the position, and just hold and forget about it. So
Yeah,
yeah,
but also for portfolios, I remember it very, very well, and you are totally right. But for portfolios, you should use ETFs or stocks, not futures. I mean, no one is building portfolios using futures. So yeah, international exposure would be either biggest stocks of that country. So you said, Rafael, that you are trading CAC by trading biggest banks in France, something like that. Yeah,
exactly.
yeah. So biggest stocks in that index. So biggest German stocks as an example, or ETF, which follows DAX. So there are plenty of those. Of course, you need to check the liquidity on those, but there are plenty. Yeah, but exactly, and it reduces correlation of a portfolio because still, I mean, we need to know what to advise for people because for retail people, real majority of those are long only. So, what is the most important thing for long only portfolio? Not some retirement investment that you will hold 10 or 30 years, but for an active portfolio where you are holding positions couple of months or riding trends or whatever. So what is the most important? Correlation. Because if you are buying highly correlated assets, basically, if you are wrong, everything will go against you. And how to lower that correlation? Of course, you can lower that correlation somehow, even in the US. Let's say your portfolio is only US by having exposure in different sectors, especially things like cyclical defense versus defensive or interest rate sensitive versus not interest rate sensitive. So, by having a little bit of REITs and tech, but also a little bit of non-sensitive things. But the better way to reduce exposure, of course, it takes more analysis, takes more work because you need to at least be familiar with what's going on in our markets. But the best way to reduce exposure is to diversify not only across sectors but across industries. And I know that some people, especially in the US, they will be worried about currency exposure, that, oh, I will buy stocks in different currencies. So that's nothing to worry about when it comes to stocks from G10 or whatever. In the long run, currency differences doesn't matter, and there are plenty of studies and that the stock market is a very good weighing machine. I mean, euros, dollars, exchange rate changes. Usually, stocks are negatively correlated to the currency of that country. So, I mean, it will weigh itself out. So, no one should be worried that, oh, I mean, I will buy stock in euros and euro will collapse. Well, if you buy good companies when euro collapse, those companies will go up, and you can backtest that easily. Even DAX itself. What I want, actually, I will share screen again for a little bit. On Almighty TradingView, I have not used that thing for Rafael. Where is compare button? You know that?
no, sorry. Maybe the plus on near FDAX.
Yes, Sorry, yeah, I use the Sierra charts all the time for my trading, so sucks. But okay, euro dollar. I mean, as simple as that. So we have DAX. Wait, what I did just here. Okay, so okay, let's see what we have. Let's get rid of the indicators because I know that it was true 10 years ago and it will be true now. Uh, so basically, what I wanted to show here that is I mean, there is a quite significant correlation, and we can go to index. Maybe it will be even better, but I mean, yes, same thing. But there is a significant correlation. You don't have to worry about that, and that correlation is not uh, going against you. It's going for with the investor. So you don't have to worry about this thing. That's what I wanted to show. That I remember, like 10 years ago, I met a guy who was basically trading DAX based on euro dollar chart. I mean, I don't know if that guy is still trading, and I don't know if he's making money now, but then he was quite successful. Anyway, that's just what I wanted to show. That basically, for international investors, if you choose assets right, you shouldn't worry about the currency risk, at least not a lot. It will not matter. Of course, if you are trading some, I don't know, very volatile country stocks, Turkey or whatever, based on reason. But even then, I mean, stock market's job is to try to fight fluctuations in inflation and so on. And in the long run, that stock market is doing its job quite well. Yeah, so sorry, it was my I changed the topic a little bit, but yeah, so correlation, because when you're long short, you can use different things to reduce portfolio correlation. You can, long something, short something, like I was talking about spreads all the time, like buying one stock, shorting another. But for long only people, and I still think that majority of retail traders should be long only. Not day traders, I mean, but position traders. The stock it should be long only. So you should be focused on correlation of a portfolio. Yeah. So yeah, I hope it helps.
So actually, Raghav sent two questions here, and I think we have addressed them. His first question was about NQ. How do you call it? NQ cap, sorry.
Oh,
So yeah, so
I saw that. The question is, can NQ go to 19K? Yeah.
no, it was just how do you interpret the thing about the cap? So we have addressed this. Basically, what
Yeah,
you
it's
are waiting
probability. I
for.
can just simplify things. It's probability. It means probability that even if market grinds higher now, that first of all, probability of down move is way higher. But second, even if it grinds up, that it will not go a lot fast. I mean, it can go a lot in months or years, but fast it will not go a lot. Yeah.
Yeah, on my part, Raghav, I'm gonna expect the low of the short-term range to go up and to catch up with price. That's my expectations. My expectation. I think that okay, either we get some crazy move up to continue, or we had some kind of consolidation for a few days, maybe a week, so we trade sideways, and in the same time we have the bottom of the short-term range that catches up with price, and at some point you're gonna see the upside downside ratio on MFR giving you 1.5 or 2, and it will be the time that you can consider, okay, now we are back to the next phase, which will be the continuation of this rally. So that's my expectation. In the same question, Raghav asked about the US 10-year. So the US 10-year, like I said, you should monitor if we break trend or not. If we break trend, expect rallies that we had, the kind of rallies that we had in October to December last year. If we don't break, it's not my opinion. I think it's going to break. But if we don't break, then monitor correlation like Vi suggested to do. Another user sent another question. Vice, I think you can also reply to this one because it's related to correlation. So Fitzroy said, I tend to trade with a 1 to 3 month expectation. In your trading, do you use the long-term range on the weekly or only on daily? How would you catch longer trends? Thank you for the chat. So
yeah, so I don't know, you have something to add, or I will answer.
yeah, I mean, I always use the daily. I don't use that the weekly. I just use the daily.
Yeah.
So for starter, it's not because you are looking for on the weekly for your indicators that they will provide you with a new indication. If I trade for swings, I'm going to use the daily. That's it. And how do you catch longer trends? So like Vice said, the long-term range, when long-term range and short-term range meet, this is when you take this is when you can take a very good entry. And second, when you can add, or if you missed the bottom, I'm looking at my trade indicator on the daily, and all three are pointing down. So the trend, the trade, and the volatility itself are pointing down, and they are coming off a vol event. This is when, if I see the price is doing that, we are reclaiming trends. This is when I'm going to add, or I'm going to take a position for a move that will last. So I address also this point in my video. So that's my take. Bye.
Yeah, so first of all, I also trade with a 1 to 3 month time horizon. So I have quite a lot to say about that. And I think that when it comes to not day trading, 1 to 3 months is the best time horizon to consider. But yeah, so no, I would never use longer term ranges or any of MFR ranges on any other time frame than daily, because it was built on daily, and we are using also, even though it worked on other time frames. I mean, I tried that, and it ranges a risk profile, but that risk profile takes a lot of different data points from different time frames. So I mean, first of all, if you are increasing the time horizon, then we are using synthetic volatility components, because these time frames just don't have data for that. So it was built on daily, and it's supposed to be used on daily. Even though you can get, of course, upside downside ratio, but I would not do it. So Dave, what I focus on is upside downside ratio on a longer term range, and regarding correlations, I'm more worried about correlations when the things that I'm talking here, when I'm trading indices. I mean, options on indices, whatever, doesn't matter. But when I'm trading things like NQ, ES, DAX, Russell, whatever, so overall market. When I'm trading directionally, I don't necessarily look at how sectors are correlated to ES, for example, because that's not what they are used for. I use so-called correlation. I have a view. I have a view based on these things, but that view is on a market. And we all know that SPY can go up, but big percentage of components in SPY can go down, because, I mean, we all know how these things work. So when it comes to individual stocks, I only trade catalysts. So you need a catalyst. When the longer term range is showing you good, let's say, upside downside ratio, so bullish. I mean, downside is capped. Market is relatively close to the bottom of the range. Then I use option structures to buy these things, because risk management is the most important thing. So I buy like 45, 60 days out options or something. Usually it's of course not outright options. It's spreads or other structures to be capital efficient, and that will give me a good risk reward. But what is most important is upside downside ratio. Sorry, Rafael, can you repeat the question? What are other parts of the question? What I need to add?
Yeah, give me a sec. So the first
How
part,
I use
long-term range on the weekly, daily, and how do you catch longer term?
yeah. So how do I catch longer term? It's quite straightforward. I mean, my trading is not very. I try to keep things simple because simple is what works in general. So uh, then don't use option structures, because with option structures, I mean, even though it's capital efficient, it's of course usually everything is limited. Risk reward is good, but your upside is limited. But if it's a really good trend, you buy as close to bottom of the longer term range as possible. And when I do that, even though I do it very rarely, but I do that, of course, with futures, with ETF stocks, you trail the stop. I mean, that's the only thing, because I'm not talking now about spreads that, it would be another topic. So outright positions, you just use daily time frame, no other time frames at all. And you have the signal, you buy it. If position is going against you, you cut it, because I mean, if it reverses again, you will be able to initiate it again. But if it's going in your favor, after some time, you trail stop, or you sell some. I sell some at the regular range. So, I mean, if I buy at the longer term range and position is going, and for example, longer term range is showing that still upside is here. So, I mean, everything is good. But then the position is already open. Then you can add back regular term range to see for timing wise. You say, but based on regular term range, it can slow down or stop. But in this case, I would not sell entire position, because that's the point. We want to catch longer term trends. So if we see disagreement between longer and regular, you can sell some. But the answer is very simple. You trail the stop. I mean, every couple of days, you just move a stop higher and higher and higher. One day you will be stopped out. But to keep in mind that if a trend is strong, you will not be stopped out, because no need to keep the stop loss like very tight. It should be wide. But if a trend is strong, you will be able to ride. And if you get stopped out, most likely there will be some sort of correction. And as always, if a signal is still there and your opinion is still the same, you will be able to buy again. So from my point of view, it doesn't matter which strategies I use, and I use quite a few, because intraday I trade futures, and then not intraday I trade both options and the spreads, not only option spreads, but long, short. So the most important thing in any of these is risk management, because if you want to survive, if you want to do it for long time, I want to say, for a lifetime, and still be there, the most important thing is to, if you have an idea and open the position, and position is going against you, there is no single reason for you to hold it, because people say, oh, maybe it's just a small correction and then it will reverse. Yeah, okay, if it's just a small correction, you will buy it again. One advice, doesn't matter what you're doing, one advice is, if it's going against you, you don't need that position. That's it. Yeah.
Okay, yeah, I think that was the two questions. Let me check again just to be safe. That was okay, yeah. Fitzroy say got it. I saw a question also on Twitter. It was again Ragav regarding the video I did about my script, So yeah, basically he was asking when do you buy for the 5 minutes? So it's the same the same reply as for Fitzroy. My scripts were built for using the way I'm using it. So for the day trading stuff, 3 minutes, 15 minutes, 1 hour, 2 hours. The reason why I'm using this time frame is because from using it, this is the best way to do. If you find a way to use it on the 5 minutes, good for you. But you can't ask me, okay, how should I use it on the 5 minutes? Because I'm going to tell you, don't. So, but if you find a way to use it on the 5 minutes, good. No problem. I know some guys, they use it on the weekly, you know. Good for them. But yeah, for day trading, 3, 15 minutes, 1 hour, 2 hours. Then Raghav said, how do I know I need to wait for example, the limits I have given for the 3 minutes, they are breaking. And how do I know? Maybe I should look for the longer time frame, like the 1 hour or maybe the 2 hour. So what you want to watch out is the blue. So now I'm talking for the people who are using my script. Huh? The blue line to go above the white line. So the volatility to go above trade, and to see when this vola is going, what's going to happen on the retest of trade. Okay, be it on the 3 minutes, the 15 minutes, or the 1 hour. Is it using the trade as a floor and then rising again, or when it goes there, it just crosses back down? If it crosses back down, that was just a very quick vol event, and you have confirmation you can hold the position that you took, or that you can take actually a position that you didn't take yet. If it's using trade on the 1 hour as a floor, and voila, the blue line starting to go back up, okay, you have a vol event. So these moves will usually last between, let's say, 3 to 7 days. Okay, so that's what you should expect. So this is when your brain should rewire and think, okay, now I'm actually in a short the bounce mode. And I'm waiting for the 2 hours to confirm we have ultimate bottom. And this is where I can take the swing and start to switch my brain back to buy the dip mode. Okay, so you want to see volatility, use trade as a floor. This is when you know you should look for longer time frame, like the 15 minutes, the 1 hour, or the 2 hours, to find the true bottom. Okay. Currently, you don't have to look at it. I mean, until today, let's see. But until today, the 3 minutes was fine. Anytime you had vola rising and you had trade going higher, it was the time to buy the dip. And you just held when it went to min on the 15 minutes, for example, you exited. I mean, these past 2 weeks were very, very profitable if you bought any time you had vol rising. So I hope I answered the question.
I can add something from that I think is important from what I see, of course, what mistakes retail traders do, and from my experience and everything, that it will not be related to specifically Raphael's indicator. It will be related to any indicator and any strategy you use. I mean, you can trade, having MFR range on a daily chart and trading 3 minutes, doesn't matter. So moving averages, whatever you trade, of course, don't trade moving averages, but I mean, it's not related to any tool. If you want to buy something, so let's say market is dropping, volatility, yeah, now I will try to talk about Raphael's indicator, but it's any indicator. Market is dropping, volatility is rising. Let's say hypothetical scenario, volatility reaches some level that you think that now volatility will reverse, will start to go down, and the market will reverse, will start to go up. Yeah, hypothetical scenario. Doesn't matter. It reaches an FR level and you are monitored. You only initiate a position at some level you are interested in when it starts moving to your favor. In very small time frames, of course, you need to be very fast and to react quickly. But now that hypothetical scenario, market is going down, volatility went up. You say, oh, okay, now vola indicator is what level 20, let's say. Again, it's pure random number. 20, you think, oh, volatility reached 20, I will buy NQ here because volatility reached 20. And you are looking at 3-minute candles, but that 3-minute candle is still red, it's still going down. You don't buy something for a trade when it's going down. You need to time that. So now you have now it will be more of a day trading education, but it's very important, very important, and it will help you to succeed. So you are watching small time frame for something. You say, I want to buy here. Maybe because, it reached MFR end of day range. Doesn't matter. It reached, and you say, you are looking at 3-minute candles and say, hey, this level I'm interested to buy. You wait for market at least slightly to reverse, slightly to go up, I don't know, couple of ticks, couple of points, depending on the instrument. Because it will give you a cheap trade. What means a cheap trade? No, I will not start drawing on a paint. I will try to simply explain with hands, whatever. But when you have a down move, now you have a small, like a hook, small reversal, small, whatever. You buy it. You have a very cheap place to put your stop loss, because where your trade will be invalidated, because market went down, it starts to grind up. You think that it will now go up. You buy. Well, guess what? If market makes new low, your trade is invalidated. You was wrong, and we as traders will be wrong all the time, because that's the point. You get a cheap trade. What is a cheap trade? Where it's an obvious place where you are wrong. And if you want to enter positions in spots where that place is very close to your entry price, it means if you are wrong, you will lose a little. And if you're right, you can ride. That's the point. So it can be that. So it doesn't matter what indicator is, Bollinger Band. I mean, I don't care. It works for VWAPs. It works for 3-month horizon, 1-week horizon, intraday futures horizon. Doesn't matter. You want to buy something because it's at the low end of a range on a daily. You want to buy it and keep it for months. What you want to do is, let's say it went down. So we had red daily candle. I mean, you will not miss a move. Some people think that I need to buy now when it's going down, because otherwise I will miss a move. No, it can go way lower and you will buy dropping, think that it's dropping. No, even on a daily time frame, it reached something, upside downside ratio is good. You don't have to wait another day for a green daily candle, but at least wait for something. At least wait for a green 15 minutes. I mean, I don't care, but something. But retail traders are doing all the time. I'm sorry, I'm emotional about that because I know that it's all over the place. What retail traders are doing, they are buying things that are going down and shorting things that are going up. I mean, that's not how you make money. I mean, when a thing is going down and you think that it's cheap, well, because in the market, nothing is cheap, nothing is expensive. I mean, it's what market wants to pay for that. But I'm just using that word. If you think that, hey, this stock fell 20% and now it's amazing to buy it because of this, that, and it's at the low end of the range and volatility is very high, and basically you really think that it will reverse. Don't buy when it's going down like a brick. Wait at least for something. Come on.
Yeah, well,
yeah, and
what Vai is saying is it's okay to pay an extra 2 or 3 times.
Of course.
just to have price discovery to confirm your thesis.
Yeah, you know, I want to stress one thing more because I mean I'm trading for 13, well now, yeah, 13 years. I mean, uh, out of which like six years I'm making a living of it. What changed? And before that, I was talking about that. Before that, I lost tons of money, forex, stocks, you name it, tons of money, and burned through accounts like crazy. What changed? Have I found some magic formula, holy grail? No, I'm just not holding losing losers. If a trade is a loser, you just get rid of it. And so that's one thing. Another thing I don't buy is at the spots where there is no obvious invalidation point, and I just explained. So, and you know, there is this saying all over the internet, this stupid saying, the most stupid saying ever, that basically trading is buy low, sell high, or short high, buy back low. No, you know what is again, it's my opinion, but it works for me, and I want everyone to succeed. I don't want people to continue burning through their accounts. Not buy low, sell high. Buy high, sell higher. You know what it means? It means you buy something that's going up, not and I'm not talking about maybe your signal is on daily, but at least buy when it's going up on short time frame. If you are afraid to miss it, but I can assure you, even on day, you will not miss a move, because if it's a big move, you will not miss it, and if it's a not big move, you are not interested in it anyway. I'm talking about longer term trading and not day, but it can be applied to tick charts. I use, when trading futures, I use the DOM at all. Basically, I'm not looking at charts. I use the depth of market. You know, for those who know the DOM, it means. So what it means, I think that here there is a imbalance between buyers and sellers, and I think that now people will push ES, let's say, higher. It's just an example. So what I do when I buy it, if it's not for intraday, if it's not going up immediately, it means I bought it's going up. If it's not doing that, what I do, I get rid of that trade. I was wrong. That's it. So it works on monthlies, weeklies, dailies, tick charts, you name it. Two things. I hope, I mean, yeah, I don't remember if I ever had such emotional rant here, but
No.
two things. If trade is going against you, you don't need that trade. And another thing, I mean, if don't buy something if even on lower time frame, if it's dropping like a brick, because when you wait, you will see a slowdown, it will stop dropping, and maybe it will continue grind higher. Buy then. That's it, I'm done.
Yeah, that's good. I mean, it's risk management always. Always have a stop, and maybe wait.
Well, you should cut it. You should cut that video and share it on Twitter as a short. I'm not joking. I mean, because
yeah.
I don't know if I am clear enough. I hope it's clear, because what I'm trying to say is very important, and even I would say the most important. That's all.
Yeah, wait for price discovery. At least it's okay to just miss an extra few points to be sure. Fitzroy actually asked another question. I guess you joined after the beginning of the show. So yes, we're gonna add the scanning for stocks that are capped. Not this weekend, but next weekend. So Saturday or Sunday next week, there will be an interruption of service for 1 hour and a half, 2 hours to post the new version. And this new version will include the possibility to scan for stocks that are capped. And as you know, you can scan based on countries, based on trend, based on upside downside ratio. All these things can be combined to scan stocks. So yeah, I think we're good. We are. I mean, we expected the 1 hour, 1 hour stuff. I know we talk too much always, but yeah. I mean, the idea is to give as much info as possible. Okay, Fitzroy say I'm in Australia. I just woke up.
Yeah. Good morning. So.
Good morning, man. Okay, okay. So we are okay, right? There are no more questions.
Yeah, so yeah, I hope my rant was useful. Thanks,
Yeah.
thanks everyone for watching. As always, you send us questions on Twitter, via email, or whatever. If you have any questions you want us to cover on our shows. And yeah, thanks everyone. Thanks, Raphael, and we'll see you in most likely 2 weeks.
Yeah, in 2 weeks with Ted. Ted will be joining.
Yeah,
Sometime.
perfect. Bye, everyone.
Bye.